those are market insights. I hope that you guys have a fantastic and restful long weekend. Very good morning to all. I'm Kelvin here. Today will be Tuesday, the 21st of October 2025. So before we start our very interesting and exciting daily dose for today, let's have a quick look at the disclaimer first. All right. So just to make sure that the screen is okay. All right, all good. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is for general information purposes and is not investment advice. Past information is not representative of future results. All right, so here we go. So as usual, let's have a quick recap what has taken shape before we went for a long weekend break, which is on a Friday, and as well as in yesterday's session in terms of the relevant news flow, economic data releases, and as well as their respective impact on the broad-based cross asset classes price movement that we cover on a frequent basis. That means, i.e., the major dollar pair, the major stock indices, and as well as the two key commodities, which is gold XAU/USD and the West Texas crude oil. And also during the second part of today's daily dose, we will do a full suite of that daily intraday technical outlook on all the 12 instruments. So before we start, let's have a quick recap what has taken shape on Friday. So Friday is a kind of a very volatile session, but what's interesting is that the overall the US stock market ended in the green. All right, over here. So what we could see over here is that, let me share the chart of the S&P 500 for you guys to have a better visualization of what I'm talking about. So this is the chart of the S&P 500. So what we could see over here is that on Friday, initially there was a sell-off at the European session. During the European session, the S&P 500 CFD index taking the cue of the S&P E-mini futures sold off. But once the US session underway go on last Friday, it actually rallied and staged a return of 0.53% by the end of last Friday US session, which is on the 17th of October. And one of the reasons why the US stock market have this risk-on behavior on last Friday is because the US-China trade tension appears to be able to find some kind of positive turn around over here, because on Friday, US Secretary Scott Bessent, which is the leading US officials in this that lead the US delegation in this ongoing US China trade truce negotiation talk. We have a series of them since May, and the last one, they have decided to actually kind of resolve certain part of their disagreement to allow more time for both sides to work out, and they have this extended trade truce until middle of November. All right, and after that, 2 weeks ago, Trump actually made a big fiasco and stating that he wants China to abide to US, we call it rules, and he actually bring forward the deadline, the trade truce deadline, to 1st of November, then threatening, number one, to we call it increase 100% additional tariffs on China products heading into US, all because of this brinkmanship play between two sides, where the US continues to restrict key high-tech technology supply heading into China and know-how, and China in retaliation restrict further rare earth export control. And we know that both of them require a certain portion of these two instruments. Okay, China, in order to become a global, powerful, high technology powerhouse, they require certain kind of semiconductor chips that their own local semiconductor manufacturing hub hasn't yet reached that we call it upscale standard compared to US NVIDIA and AMD with the likes of it. Whereas in order for US to be much more efficient in producing these higher end chips, they require raw material inputs like rare earths. There's various kinds of rare earths. I don't go into detail. And these rare earth supply are being controlled by China. So it's a chicken and egg question over here. So China saying that, hey, you guys do not want to supply me with those advanced technology know-how. I will stop you from getting your raw inputs. So you will not be so US will not be able to sufficiently and have a higher economy of scale in building such higher end semiconductor chips. All right, so it's more like a brinkmanship play. And finally, Trump decided to actually throw in a bit of the towel, saying that they actually plan for a talk this week. So this was last week news, last Friday. So US-China talks plan next week. So next week, that means this week in Malaysia. All right, over here, which is the APEC, not APEC, the ASEAN, one of the ASEAN summits. So that I'll share with you which is the date to look out for over here. So the next round of US-China trade talks is set for next week, which is this week, with Treasury Secretary Scott Bessent and Vice Premier He Lifeng negotiating down new escalatory measures over here. And he said that he will meet in person in Malaysia to prepare for the two presidents to have a first face-to-face meetup. So that will be expected to be on the end of this month, which is 31st of October in South Korea during the sidelines of the APEC summits over here. And also yesterday, US President Trump also sounded a bit of optimism. He's expecting that Taiwan to be part of the negotiation topic this week when US Secretary Scott Bessent meet with his counterpart He Lifeng and predicts a potential trade deal. So Trump, by expressing such positive tonality, kind of a 2 weeks ago harsh rhetoric that causes the US stock market to rally very strongly yesterday. And bear in mind, this all came within our expectation. On Tuesday, we do still expect to have a bullish bias on the major US stock indices, and the major US stock indices challenged our short-term pivotal support and did that expected bullish reversal and hitting our near-term resistance as highlighted in my daily dose on Thursday. So later I'll share you guys what are the key levels to look out for again for the latest rundown on the intraday technical outlook. So this is the outcome of what has happened 2 days, for the past two sessions. Number one, we have a big kind of a, come on, where is it? Yeah, we have a big change in tonality from Trump. Initially, he was very hot. Initially, he was very has a hawkish rhetoric. He toned down his hawkish rhetoric, and market rallied accordingly, based on a potential ironing out of this thorny issue between US and China. But we shall see what shall take place going forward. Later, I'll share with you what are the dates to look out for this week in this upcoming. I think we have our fifth round of trade deal negotiation talks between US and China, and this time around they are having it in Malaysia, right? Test 1 2 3. Mic test 1 2 3. Yeah, I think the sound is back. Yeah, good. So one thing I'll share with you from a technical analysis perspective, this is considered as a bullish breakaway as you on my screen over here. So this is the S&P 500 index over here. So previously this sell off on 10th of October, Friday, which Trump threatened with a harsh rhetoric on imposing that additional 100% tariff. Then thereafter, we see a slew of what I call bring, I'll say that back and forth, where US Treasury Scott Bessent and some other several US officials coming in to tone down the rhetoric, and eventually we see a bit of sideways consolidation from 13th of October all the way up to 17th October, and finally there's this bullish breakaway from this 1, 2, 3, 4, 5 day of consolidation by this bullish breakaway candle that is being formed on Monday, which is yesterday, and have a positive close above the previous two bearish candle of the prior five session consolidation movement, which is on the 15th of October and 16th of October, which I draw this dotted green line over here. So this is considered as a rather positive price action development on the S&P 500 as it proceeds to potentially hit higher highs and also searching for new fresh record high in this eventful week over here. But bear in mind, given the fact that yes, technically it's a very positive price development, but given that we know that things are very fluid, and especially any point in time somebody could tweet again by posting some measures or some remarks that are rather anti-bullish on the US stock market, and that may cause another downside volatility to take place. So to navigate such environment, we got to have a proper risk management, we call it a procedure or practices coming into mind as we navigate this kind of we call it impromptu remarks coming out from the key stakeholders surrounding US-China trade relationship. All right, over here. So now this for the US stock market, rather positive. And over here from the Asia session, Asia market perspective as well, the Hong Kong stock market also rallied yesterday over here. So if you look at the Hang Seng Index, there's also this bullish breakaway as well after trading in a sideway down, we call it a price action momentum sideway movement from 13th of October to 20th of October over here. So there's this bullish breakaway as we've seen in today's Asia session, where the Hang Seng Index is up by 1.88%, and in fact yesterday it actually starts to gap up at 2.42%. And the reason why the Hang Seng Index rally is because of yesterday's key China data came in within expectation, and one particular key metrics which are being highlighted for you guys is that another sign that the deflationary risk spiral in China has been reduced by another notch over here. So what do I mean by that? So let me share with you the data that was released on Monday yesterday, the Chinese data. So the Chinese data over here is that yes, we know that the GDP numbers are below expectations. Still bear in mind that not below expectation, below the 5% level. Why 5% level was very important. So this is the Q3 GDP growth for China, because the China top policymaker has set a hardline target of around 5% growth annualized by the end of 2025. So if we see it dipping, initially we thought that hey, the Chinese economy is shrinking, but that also came in within expectation. So that is more likely due to a seasonality factor over here. Market is also expecting 4.8% we call it year-on-year growth for Q3, which indeed came in within our expectation. But if you look at those figure that is much more forward-looking, like industrial production and retail sales. So industrial production came in better than expected at 6.5%. Market is only expecting at 5%, and also came in higher than the previous month of 5.2%, which was in August over here. And also retail sales also managed to jump up slightly higher. Market is expecting 2.9%. It came in at 3%, but still below the previous August mark of 3.4%. But what's interesting over here is the house price index. Yes, it's still in the negative growth, but the house price index, the rate of decline or the rate of deceleration starts to slow down. So what do I mean by this? All right, so this is the mildest drop in home prices since 2024 over here, as Beijing support measures continues to cushion the property market. So if you look at the 10-year trend, it's actually doing a kind of a recovery over here. So the lowest was in October 2024, which was negative 5.9%. So as we went into the new year of 2025, the rate of decline is slowly decelerating. That means the pace of decline has started to slow down, which means, i.e., there could be a potential turnaround in the Chinese property market. The odds are getting higher and higher due to the latest, we call it housing price index for the month of September, which also means that the risk of deflationary spiral in China has reduced as well. So that actually created a positive, another buffer of positive feedback loop into the China stock market, i.e. the Hong Kong stock market, on top of that easing of trade tension between US and China based on the latest remarks from key US stakeholders. All right, and also in other parts of Asia like Japan. So Japan market within our expectation, the stock market rallied to a give me a minute over here, rallied to a fresh all-time high over here, despite the fact of this political uncertainty in a couple of days. So what you could see, it cleared above 48,670 over here, and now hitting our resistance level that we highlighted on last Thursday. So later I'll highlight what are the key levels to watch. But for sure, now the rally continue, which means that this is the daily chart. It's still trading within a medium-term ascending channel. That means this medium-term uptrend from the low of 7th April continues to remain intact, as it continues to breach a fresh all-time high yesterday. And in today's Asia session, it added 0.67%. So one of the reasons to support this ongoing rally is that the leader of the new leader of the ruling party LDP over here, she managed to actually gathered enough votes potentially from another coalition. So previously, a week ago, Takashi was actually named as the LDP leader. So in order for the LDP leader, which is the ruling Japanese political party in Japan, for her to become the next prime minister, she needs to get voted in the Japanese parliament. We call it Diet, all right, over here. So Diet will vote for her. But the situation get a bit dicey about a week ago, where LDP, the current ruling party, has formed a traditional 20 years or 30 years plus of coalition with this party called Komato. So Komato decided to break away from this coalition. So by breaking away this coalition, there is a big risk that Takashi may not be able to gather enough votes to be formally named as the prime minister. So on late Friday, there was this particular news coming up that the LDP party managed to struck a deal with another Japan opposition party called the Japan Innovation Party over here. All right, so they're able to work out a deal. So with the members of this Japan Innovation Party, the number of them in the current Diet, which is the Japanese parliament, if all of them cast their vote towards LDP leader Takashi, there's a high chance that today she may get voted in as the next Japanese prime minister officially. All right, over here. So that causes the Nikkei 225 to rally. And bear in mind that why the Nikkei 225 rallied, because Takashi and this new coalition party, Japan Innovation Party, they advocate for what I call it expansionary fiscal policy. That means they actually aim to actually increase defense spending, tech spending, cybersecurity, and nuclear energy. So that was during her campaign when she actually get voted in as the LDP leader around 2 weeks ago. And the LDP and ASHIN, which is the Japan Innovation Party, in their agreement said that they aim to expand private public sector investment based on responsible expansionary fiscal policy and streamline government operation with thorough spending reform. So that actually created a positive feedback loop into the Japanese stock market. That bear in mind that in the last few we call it session 2 weeks ago, because the upcoming new Japanese PM Takashi, she is a protege of the former late Japanese Prime Minister Abe, and we know that Abe advocate also for a very expansionary, accommodative monetary policy, where he wants to keep Japanese interest rate at a very low level for a very long period of time. So market actually has this pricing in of Takashi may revert back to Abe, a favorite Abe form of very low interest rate policy, where the Japanese government may push for Bank of Japan to, instead of normalizing monetary policy. So since 2 years ago, the Bank of Japan has been normalizing its prior ultra easy monetary policy by gently increasing interest rate one step at a time. over here. All right, so from negative rates, it went up to 0, and now it's back up to 0.5%. And some of the BOJ members also hinted that they will continue to increase interest rates in Japan due to the current fundamental that is backing for higher interest rates over here. So market has this pricing in that she may pressure Bank of Japan to do the reverse, and that causes the Japanese yen to actually spike up 2 sessions ago, not 2 sessions ago, spike up 2 weeks ago before coming down in last week over here. So it will be a much more volatile session over here for the dollar yen. So later I'll share with you what's the dollar yen movement. So if you look at the intraday chart of the dollar yen over here, this is the 5-day rolling performance. So we know that on last Wednesday, the dollar yen tumbled. As you look at the dollar yen will be in dark blue over here. And as we are speaking right now, the dollar yen starts to rally. But on the 5-day rolling performance, is still down by negative 0.43%. And if you look at the 1-day rolling performance, the dollar yen on the brink of this Japanese parliament vote for the new prime minister, the yen rallied by a fair bit, up 0.32%. This is based on the 1-day rolling performance, based on the last 24 hours until as of now. Being the dollar being the strongest performing currency against the Japanese yen as we are speaking right now, as only the dollar index continues to trade at 0.11% over here. So now, with that in mind, bear in mind that yesterday it was a bit of whipsaw over here, because if you look at yesterday's, there is actually a BOJ federal officer spoke yesterday. So there's this BOJ board member, Takada. He said that it's actually advocating for another upcoming interest rate hike, likely to be end of this month over here. So he said that Bank of Japan board member Hajime Takada said the time is right for rising the bank's policy interest rate. He noted the importance of addressing inflation levels that have been exceeding BOJ target for more than 3 years over here. So Takada remarks suggest there is a chance of another split in the vote at the board meeting this month if Governor Uda pushes to keep policy rate unchanged. So potentially based on his remarks over here, there could be some form of more fierce debate for this month Bank of Japan policy meeting. And despite if Bank of Japan didn't rise interest rate this month, very likelihood they may do so at the last meeting of this year, which is in December. So that causes the yen to actually whipsaw in from Friday until now because of this BOJ hawkish official talk. And also on the opposite side of the story, we have this PM new prime minister vote coming in, where markets continues to price in Takachi may continues to advocate for a easy monetary policy, hereby preventing BOJ from doing their job on a very smooth operating basis. All right, over here. So I'll share you what are the key levels to look out for the dollar yen for today. All right, over here. And with the gold continues to rally to fresh all-time high. So gold, if you look at the price of gold over here, so this is the monthly chart of gold. So month to date, as of now, gold is up by 12.7%. So if you look at yesterday's price, it closed at 4,355 and hit a fresh all-time high at 4,381. All right, over here. And in today's Asia session, there's a bit of consolidation at negative 0.18%. All right, over here at this point in time. So with that, I've covered much ground. The reason for gold coins to rally over here is purely two things I have in mind. Number one is technically driven over here because of momentum still remains strong. And secondly, there's this debasement narrative over here. So debasement narrative more lies on the US government policy that causing a bit of uneasiness in market in the global markets. Why? Because the way US government does things, they want to widen their budget deficit over here. By widening their budget deficit, there could be a risk of loss of faith in the US Treasury bonds fixed income over here. And also given the fact that the ongoing government shutdown, that could potentially lead to a further weakening of the US economy over here. So there's this we call it a lack of dynamism, lack of economic dynamism, that the US may starts to be impacted. And because of this impact, there's this very strong debasement narrative trade stating that the market players may lose faith in the US dollar, which is particularly the fiat currency over here. So with the losing of faith in the fiat currency, there will be this strong momentum push into hard assets like gold, okay, which is benefiting from this. And also these two interplay that is in play, that is causing the bullish momentum to actually continue, at least in the medium term, for gold prices over here. So later I'll share with you what are the short in term intraday technical levels to look out for gold. All right, so with that, let me now start the second half of the segment, which is the intraday technical outlook, starting with the FX market first. All right, so let me expand my screen so that you guys could have a better view of the charts over here. All right, so let's start with the FX market. All right, so before we go to the FX market, right, it's good to have an overview where is the US dollar heading by looking at the US dollar index over here. So this US dollar index, previously I do share with you guys that since the low of 1st of July, it has been trapped in this sideways range configuration, and this sideways range configuration has formed a very clear lower, the low, these two low here, as you could see in my screen. Let me highlight to you guys. Okay, this low, same low. All right, similar low, and we start to see lower high. Okay, so by joining this price action, these two gray lines here, it seems to us that the US dollar index is now trading within a close to 3 months plus of sideways range configuration, and this sideways range configuration takes in the form of a descending triangle range configuration. All right, over here. And on this last 2 Fridays ago, which is 10th of October, it did a bearish reaction of it. And in the last session, which is on Friday, it managed to survive at the 20-day and the 50-day moving average, I think as an intermediate support at 98.05 over here. So potentially now it may hit back to retest the upper limit of this sideways range configuration again, which is at 99.40, that upper limit of this potential ongoing 3 month plus of descending triangle range configuration, or he could just potentially mingle around in the very narrow range for today again over here. So now the key story over here, there is no clear trend in the US dollar index. So in a very short term basis, potentially we may continue to see this kind of vicious whipsaw price action among the major US dollar pair, given that there's no clear trend that is being formed on the US dollar index. So hereby, if you look at the euro dollar over here, so the euro dollar previously we do have a pivotal support level at this 116.45, 116.25. It rallied from the pivotal support, hit the resistance level on Friday. Yes, on Friday at 117.20. Then thereafter it did that pullback again, and right now is resting at this pivotal support level. So still no change. I'll be using this pivotal support level for a potential recovery on the euro dollar at 116.45, 116.25 over here. So with that, as long as this pivotal support holds, the first resistance level to watch for today will consider as an upside trigger level in order to fulfill this potential intraday recovery scenario for the euro dollar. That will be at 116. Give me over here, 116.77. Let me put it in writing. 16. Come on. Okay, 1 second. Let me get it up and running. Okay, I don't know why I can't. Okay, 1.1677. before heading up to 117.20. So 116.77 considered as my upside trigger level to increase the probability of this intraday recovery for the euro dollar, since it's resting now right exactly at the pivotal support zone again at 116.45, 116.25. So a breakout above 116.77 increase the odds for this potential intraday recovery to retest 117.20 over here. However, a bearish breakdown below 116.25 will invalidate today's bullish slash recovery scenario to see a choppy downward drift to retest 115.90. A breakdown below 115.90 faces a further downside, we call it movement, to challenge or test the 115.30 medium term pivotal support. So that's for the euro dollar. Next up will be the sterling dollar against here. So the sterling dollar also traded sideways since last Friday, and is now fast reverting back to our pivotal support level again at 133.60. So still no change, still using 133.60 as my pivotal support level as it can't break above the intermediate resistance at 134.40/34.65 that was tested on Monday yesterday as well. So using 133.60 as my pivotal support level, still maintain that bullish bias, but price action got to break above 134.40, 134.65, this intermediate resistance zone here, and as well as the 50-day moving average to gain more credence for this recovery scenario to play out, to test the next intermediate resistance level at 135.10, 135.35 in the first step. Only a bearish breakdown below 133.60 will invalidate today's bullish bias slash recovery scenario to see a further drift downwards to retest the 10th of October and the 14th of October critical minor swing low area at 132.65. Right, so that's for the sterling pound or the sterling dollar. Next up will be the Asia Pacific currency against the dollar, starting with the Aussie dollar. So the Aussie dollar managed to bounce out from our pivotal support zone that we highlighted on last Thursday at 64.65/64.40. Almost hit our first resistance at 65.30 before trading downwards in today's Asia session. So it continues to be in this sideways range configuration over here. So with that, potentially there could be a minor pullback towards the first intermediate support at 64.88 over here, maximum our short-term pivotal zone at 64.65. So in any form of any minor pullback, we will still maintain a bullish bias over here, given the fact that there is this bullish reversal price action that's being formed twice on the 14th of October and on 17th of October at the short-term pivotal support area. So with that, any potential fall will be an opportunity to maintain a bullish bias on the Aussie dollar on the intraday basis, with first resistance coming in at 65.10 as you're going to trade within this potential bullish consolidation movement, given that these two V-shape that's being formed on 17th of October and 14th of October. A bullish breakout above 65.30 will indicate a kind of a minor double bottom bullish breakout to unleash a higher movement on the intraday basis to test the next intermediate resistance at 65.75 over here in the first step. So however, a price action breakdown below 64.65, potentially we may see a further drift downwards to test the medium-term pivotal area at 64.15, 64 figure level, which is also the lower limit of this expanding wedge or the expanding wedge range support that has been in place since 23rd of April 2025 low. So that's for the Aussie dollar. Next up will be the Japanese yen, the dollar yen over here. So the dollar yen managed to actually drift downwards on Friday, hit a low of 149.60 before bouncing up, and yesterday it attempted to actually inch downwards, then traded sideways, and in today's Asia session on the onset of on the what you call it on the impending Japanese Parliament Diet vote for the new Japanese PM, you see the dollar yen bouncing back up again over here. So with that, it's still there's this short-term pivotal resistance that we have on last Thursday, pardon me, at 15170 over here. So this 15170, if you were to take into account of that previous decline from 10th of October all the way down to last Friday intraday low, that constitute close to the golden ratio as well at 61.8%, very closely. So using this 15170 as my short-term pivotal resistance level over here, and if you let me share you what's the RSI looking like right now, because I accidentally deleted off the RSI a couple of seconds ago. Okay, come on, give me a minute, let me open up the RSI. Gosh, okay, give me a couple of seconds or something. Yeah, good. RSI. Okay, so if you look at the RSI, right, it's also been kept under this resistance level, a pair resistance at around 67.7 over here. All right, so with that, using 15170 as my short-term pivotal resistance level to fit any potential bounce, as long as this 15170 resistance level is not surpassed to the upside, maintain that bearish bias on the dollar yen for it to drift downwards within this complex sideways range configuration that has been in play since April this year. First intermediate resistance level to watch, first intermediate support level or near-term support level to watch today was yesterday's swing low area at 150.35, a breakdown below 150.35 exposes last Friday minus swing low at 149.60, at which is also very close to the 20-day moving average over here. Okay, only a break below 149.60 will unleash further weakness towards the gap support level that was being formed when the LDP announced its new leader, which is Takashi, and also the 50-day moving average that is confluence to it at 149.05, 148.55. Only a bullish breakout above 15170 will invalidate the bearish bias on the dollar yen to see a further squeeze up towards 152.45, and above it potentially sees the corrective rebound sequence scenario continue to play out towards 153.65, 153.90 over here. Right, so that's for the dollar yen. Now, let's sum up all the four major US dollar pair intraday technical outlook. Let us now proceed to the intraday technical outlook of the major stock indices, starting with the Hong Kong 33. So Hong Kong 33, before we go, initially we have that neutrality stance because price action swing between the intermediate resistance at 26,062 and also the short-term pivotal support previously. That was the gap up that was being formed right after that Trump hawkish remarks on this 10th of October on the US-China trade tension, and it retests again after that ding dong of a foray of remarks coming up from both sides trade tension before shipping that bullish reversal and that bullish breakout on Monday after that better than expected housing price data out from China, which is at 26,060, a bullish breakout above 26,060. So with that over here, given that price action now is approaching the next resistance level that we highlighted previously at 26,450, 26,570, we will have a bullish bias for sure for today. So price action now on the hourly RSI has really hit almost coming close to an extreme overbought level that was previously formed on the 2nd of October. So this is the current extreme overbought level over here, which is at 81. So upon hitting 81 over here, we see that pullback taking shape. All right. So potentially there could be a minor pullback coming into play for today. So this pullback may the pullback may hit very close the 26,060 level over here. So I'll be using any potential minor pullback to maintain that bullish bias on this pullback over here to get a better reward risk ratio. Then the pivotal support level I will tidy up further over here towards this level here, which is yesterday's European session low, and so very close to the 20-day moving 50-day moving average that has been taken out yesterday, taken out on the upside yesterday as well, so that it will be at 25,780. Okay, I round that up 25,780. Okay, so 25,780 will be my, okay, let me push it up from here. 25,780. 25,780. Okay, so this will be my Titan pivotal support level. So as long as any minor pullback didn't surpass below maximum 25,780 Titan pivotal support level, we will maintain that bullish bias on the Hong Kong 33. Next resistance level to watch will be at 26,935 after 26,570. Only a bearish breakdown below 25,780 will totally invalidate this minor bullish breakout scenario that was being taken shape yesterday, and see the price action drifting back down towards that all important gap support area or gap support level at 25,140 next. All right, so that's for the Hong Kong 33. Next up will be the Japan 225. So the Japan 225 represent Nikkei 225 rallied as expected over here and hit a fresh all-time high and almost coming close to our support level at 50,087, coming close to our resistance level, not, pardon me, tongue twisting, our predefined resistance level that we have on Thursday at 50,087. 50,540. All right, so that is the next intermediate resistance zone to watch. So a Fibo extension cluster level. And what's interesting over here is that the so-called the RSI has exited from this overbought level, and prior exiting from the overbought level, there's a bearish divergence over here. So be more cautious right now because of this bearish divergence and the reason exit from this overbought level. So there could be a minor pullback in play, and this minor pullback may surpass the intermediate support of 49,300 given this bearish divergence and retest this former all-time high, and which is also a kind of a range resistance that was turned into a critical near-term pullback support level right now after yesterday bullish breakout. So this will be my pivotal support at 48,845, 48,440. So this minor pullback today may actually be much more deeper, breaking below 49,300. Testing that pivotal support zone, which I adjusted it upwards over here. So I'll be looking out for any form of a bullish reversal candlestick once it hit close to 48,840, 48,845, 48,440 to flip the honors back into the bullish buyer stance again for the next resistance to come in after 50,540 will be at this 50,860, 51,095. And if I draw a much more shorter term accelerated upside channel over here, okay, that could actually go up towards the channel top as well. All right, over here, that is taken up with different color from the low of 13th of October. Only a bearish breakdown below 48,440 will invalidate the bullish reversals, we call it expectation, once it hit close to this price level, this short-term pivotal support, and do a deeper corrective pullback or a deeper mean reversion decline scenario towards 47,260, maximum 47,260, maximum 46,540, which correspond to the rising 20-day moving average. Correct. So that's for the Japan 225. Okay, very quickly will be the Germany 30, represent the German DAX. So the Germany 30 and German DAX hit our support level. So last Thursday were neutral. So it came down, hit the support at 23,710 over here, which is the minor swing low of 29th of September, and also this lower boundary of this ascending channel that I drew from the low of 17th of September before staging that V-shaped recovery on Friday and heading into Monday session over here and broke above the 20-day and the 50-day moving average again, right, after it actually retraced and reintegrate below it on the previous week over here. So with that, I'll be and also surpass the first resistance at 24,300 level, all right, over here. Okay, so now it's fast approaching the next resistance at 24,480. RSI so far has a bearish divergence, but it's at an overbought level. So there's a risk of a minor pullback taking into play after that steep rally that's being formed yesterday. So minor pullback support level to watch out for today will be at this level here at 24,260. Maximum will be my adjusted will be my new will be my this pivotal support for today at 24,140, which also correspond to this congestion area that got taken out on Monday, and also this rising 20-day moving average as well, confluencing very closely at 24,140. So as long as any minor pullback didn't surpass below this pivotal support in short term at 24,140, I will have a bullish bias in any minor pull after this minor pullback has ended. For the next resistance to come in at 24,480. Above 24,480 will retest the current all-time high area at 24,780. Only a bearish breakdown below 24,140 will invalidate Friday's bullish breakout above the 50 and the 20-day moving average, which was on Monday. Then that could see another round of choppy price action movement towards the downside to revisit 23,995 and even 23,900 next over here. So that will be a Fibo retracement level as well. If you do the Fibo retracement for the ongoing recovery, that constitute close to the golden ratio at 61.8% and slightly above the 76.4% Fibo retracement. Right, so that's for the Germany 30. Lastly will be the major US stock indices, the US Wall Street 30. So the US Wall Street 30 finally managed to clear above this key minor swing high resistance that has been resistant since Friday. So this was the point where Trump made this his remark over here, the hawkish remark, and previously price action tried to recover on 15th of October, can't recover, and did that sideways movement. And on Monday, finally, it did that bullish breakout above 46,680 level over here. So this will become a pullback support level to watch for today. So I will tighten my pivotal support towards 46,250, which is very close to the 20-day moving average. So as long as any pullback didn't surpass below 46,250, I will maintain that bullish bias on the US Wall Street 30 with 3 resistance level to watch going forward. On the very near term, 46,920, followed by 47,160 and 47,340, 47,410, which is defined by a Fibo extension cluster level. Only a bearish breakdown below 46,250 will invalidate today's bullish bias view and also invalidate yesterday's bullish breakout from this sideways range configuration that was taken shape on 10th of October to see it drifting downwards and retest the 50-day moving average, which confluence with the next intermediate support zone at 45,820, 45,710. Right, onwards next will be the SPX 500. So the SPX 500 also managed to clear above the 6,730 resistance level that got tested on 15th of October before it gave way and did that vicious sideways movement in the last 3 to 4 sessions previously. So this will be my pullback support level to watch over here. Okay, slightly look, give it. Okay, 6,725 over here. So I will actually tighten my pivotal support level to 6,670 over here, very close to the 20-day moving average. And so this congestion area here. So as long as this minor pullback didn't surpass below this tighten short-term pivotal support at 6,670, but I don't want to put it so tight at 6,725 unless we have a clear bullish breakout above 6,770, which is at the current all-time high level, then I would tighten my pivotal support to 6,725. So for now, put it at 6,670 just in case of any whipsaw around the 6,725 level. So as long as this 6,670 holds in any pullback, we will still maintain that bullish bias. Next two resistance level to watch after the current all-time high area at 6,770 will be 6,800, 6,820 Fibo extension cluster level, followed by 6,850. Only a bearish breakdown below 6,670 will invalidate the bullish bias scenario for the SPX 500 to also invalidate yesterday's bullish breakout scenario and see it drifting downwards to retest the 50-day moving average, acting as the next confluencing with the next graphical intermediate support zone at 6,580, 6,570, pardon me. Lastly will be the Nasdaq 100 over here. So the Nasdaq 100 hit the fresh all-time high, 25,255, before trading a kind of a tight sideways movement as we are speaking right now. The RSI now attempting to actually break down below the overbought level. There's no bearish divergence that's being formed yesterday. So now tending to actually come down from its overbought level, indicating there could be some form of a minor pullback. Minor pullback. First support level to watch was yesterday's bullish breakout at 25,030, maximum 24,730. So I don't want to tighten my pivotal support to 25,030 just in case of any whipsaw, given the price action hasn't cleared above 25,255. Unless we have an hourly close and a bullish breakout above 25,255, then I will be more confident to tighten the pivotal support to 25,030. So for now, the pivotal support will be adjusted towards the 20-day moving average very closely at 24,730 over here. Which is also this congestion area here, formerly on 17th of October. Previously tried to test, can't break, came down, test, can't break, and finally it did that bullish breakout above it and also above the 20-day moving average on Friday. Okay, so that was done on Friday, late Friday US session. So with that, 24,730 short-term pivotal support level, adjusted one, maintain that bullish bias. Above 25,225, after what comes next will be 25,370, 25,590, 25,640, which is also a bunch of Fibo extension cluster level. Only a bearish breakdown below 24,730 will invalidate today's bullish bias and invalidate yesterday's bullish breakout scenario to see it drifting downwards towards 24,565, maximum the all-important swing low area of 14th of October and 17th of October. And also very close to the rising 50-day moving average, now at coming close to the next support level at 24,290. So that's for the Nasdaq 100. Next up will be the commodities market, starting with gold XAU/USD over here. So for gold XAU/USD, a bit of whipsaw on last Friday around our pivotal support level. Then thereafter, it did that bullish momentum movement on Monday and also on late US session over here. So with that, the first support level to watch out for today, given that it hasn't cleared above this current all-time high area over here. Okay, that was tested in Asia session today at 4,381. All right, 4,381 over here. So with that, any minor pullback, the first pullback support level to watch out for will be at 4,267. So I'll be still using this V-shaped recovery scenario that has been taking shape on last Friday. The mid US session on last Friday at 4,203. The low will be at 4,180. So this will be my pivotal support level just in case of any wild whipsaw around the 4,267 intermediate pullback support area. So using 4,203, 4,180 as my short-term pivotal support area, still maintain that bullish bias on gold XAU/USD. Next intermediate resistance level to watch will be at 4,425, 4,455, which is a Fibo extension cluster level. Above it, seek out 4,520/4,560 next. Only a bearish breakdown below 4,180, then that will kickstart a kind of a multi-day corrective decline sequence. In first step, exposing the next intermediate support at 4,107, 4,056. If 4,056 can't hold, it may shape a deeper mean reversion rebound, mean reversion decline towards this 3,090, 4,000 level. Okay, give me a minute. Let me put it in better formation. Okay, over here. This is the 4,000 level. Psychologically, graphically, this clear former congestion area here, and also the rising 20-day moving average. Okay, at 4,000. Okay, so that's for gold XAU/USD, still maintaining that bullish bias using this adjusted pivotal support at 4,203, 4,180. That will be my short-term pivotal support. Okay, next up, lastly, will be the West Texas oil. So West Texas oil continues to linger at a series of lower high over here. So still no change as it can't break below our first support level that we mentioned on Thursday. So this level, it was tested yesterday again at 56.80 before it bounced, but the way it bounced was rather lackluster over here. So still use any bounce to maintain that bearish bias. Bounce resistance 58 figure with the pivotal resistance level at 59.15 for the next support level to come in at 55.80, 55.55. So if 59.15 short-term pivotal resistance surpass to the upside, then today's bearish bias on West Texas oil will be invalidated to see a squeeze up or towards a mean reversion rebound scenario towards 60.55 and even 61.80, which is very close to the 20-day moving average. So I still maintain that bearish bias using 59.15 as my short-term pivotal resistance level to maintain that bearish bias on West Texas oil 59.15. All right, that sum up all the intraday technical outlook on the broad-based cross asset classes. So before we go, let's have a quick look at the economic calendar. What are the key things to look out for today, other than the Japanese government parliamentary vote for the new Japanese Prime Minister? So let's very quickly look at the economic calendar. So today will be Tuesday. So Tuesday during the start or before the start of the European session at 12:20. Give me a minute. Yeah, this Tuesday, pardon me, saying there was some error. Okay, let me revise. Okay, Tuesday is here. Yeah, correct. So Tuesday, we have another Bank of Japan official speaking. This time around will be Himino. So Himino, he'll be speaking at 12:20 p.m. Singapore time, which is about 20 minutes from now. Okay, then thereafter, during the start of the European session, we have an official ECB lane speaking at 3 p.m. Singapore time. And at 7 p.m. Singapore time, we have ECB President Lagarde speaking. And for those who have an interest in the dollar Canada and even the Canada crosses, some of the FX crosses related to the Canada dollar, we will have a core inflation rate coming up from Canada at 8:30 p.m. Singapore time. All right, so then during the US session at 9 p.m., we have a Fed Wheeler speaking. So do pay close attention to Fed Wheeler's speech, because Fed Wheeler is one of the much more dovish official. If he sounded to continues to be dovish, potentially that could actually cement further Fed rate cuts bets heading into 2026 as well. So that will be at 9 p.m. Singapore time, and he will be speaking again at 3:30 a.m. Singapore time. Okay, this time, so he will speak 2 times over here in different events. So then before the start of the Asia session tomorrow, Wednesday, 22nd of October at 7:50 a.m. We have the balance of trade for Japan. So that could potentially also influence the dollar yen, the yen crosses, and even the Japan 225 CFD index. And we know that US season continues to get underway for this week as well. So a couple of key earnings to look out for today, especially those that has a high impact on the S&P 500 and the Nasdaq 100 will be Netflix over here. So Netflix will report its earnings after the close of today's US session. That means it's around after slightly 4 a.m. Singapore time on 22nd of October. So after the close of the US session today, Netflix will report its earnings, and we have a rather not really major US semiconductor, more like a mid-tier US semiconductor firm, Texas Instrument, will also report its earnings after the close of the US session today. That could have an influence on the Nasdaq 100. All right, so now with that sum up today's daily dose of market insights. It's a bit longer. Why? Because I need to have a recap of what has taken shape on Friday, on Monday, so to give you guys a better, clearer picture of what to look out for and what's going on in the global markets right now. So with that, I'm Kelvin here signing off. I wish you all a great day ahead, and we shall speak again tomorrow. Thank you.